Welcome to Equal Ground Headlines. I am Sir Jacob Downley, bringing you balanced coverage on our top stories of the day. If you appreciate journalism that explains, not inflames, hit like and subscribe to Equal Ground Headlines. In the United States, President Trump's trade policy is making waves well beyond North America. This week, Washington's trading partners are grappling with the fallout of Trump's decision to impose sweeping tariffs on a wide range of imports. On April 2nd, the White House announced reciprocal tariffs intended to mirror the duties other nations place on U.S. goods. In effect, Trump moved to hike tariffs broadly, a move aimed squarely at countries like China, but which also threatened allies with new import taxes. However, in a somewhat conciliatory twist, the president paused the largest of these tariff increases on countries other than China for 90 days. That temporary reprieve was meant to buy time for negotiation. It signaled to Europe, Japan, and others, strike a better trade deal with the U.S. within 3 months, or face the full tariff wrath. China, by contrast, did not receive such a pause. Its goods remain subject to hefty duties, as Trump has been particularly aggressive toward Beijing. The global reaction to these tariff moves has been swift and contentious. U.S. allies in Europe have warned of possible retaliation if they end up hit by new tariffs once the 90-day window closes. Countries like Germany, which exports cars and machinery to the U.S., are especially alarmed. ASEAN economies, too, are watching nervously. Many supply chains run through multiple countries, so broad U.S. tariffs could disrupt manufacturing worldwide. Financial markets have reflected this uncertainty. Stock indices have swung up and down on trade news, and U.S. Treasury yields briefly spiked amid fears of a full-blown trade war before stabilizing when Trump hinted at flexibility. Even within the U.S., businesses have voiced concern. Import-dependent industries warn that tariffs will raise input costs for factories and prices for consumers. Farmers remember the pain of the 2018 trade war and worry about losing export markets, again if trading partners retaliate. The Trump administration, however, remains unapologetic. The president insists these measures are necessary to fix unfair trade practices that have hurt American workers for decades. He argues that past administrations allowed other countries to impose higher tariffs and barriers on U.S. goods, while enjoying relatively free access to the U.S. market by demanding reciprocity. Trump believes he can pressure others to lower their tariffs and open their markets, leveling the playing field in favor of U.S. exporters. In the short term, this strategy means leveraging the United States' economic clout, even at the cost of bruising some relationships. Trump has shown he's willing to use tariffs as a bargaining chip on unrelated issues as well. Notably, he tied tariffs on Canada and Mexico to concerns over drug trafficking and illegal migration, effectively merging trade policy with immigration policy. But this unconventional approach infuriated those countries which saw it as coercive, but it underscores Trump's broader negotiating style. Apply maximum pressure to get what he wants on multiple fronts. So far, actual trade negotiations resulting from these tactics are a work in progress. Trump's advisors have hinted at breakthroughs, for instance, suggesting that deals with certain nations are very close. But as of now, no major new trade agreement has been finalized. Talks with the European Union and Japan are ongoing. With China, discussions have been tough. Tariffs on hundreds of billions of dollars of Chinese goods remain in place, and neither side has made significant concessions publicly. The president's critics warn that if talks fail, the U.S. could slip into a tit-for-tat spiral of protectionism that stunts global growth. They point to higher prices for U.S. consumers and strained alliances as too high a price for an approach that might not even achieve its aims. Trump's supporters, on the other hand, argue that previous methods, like lengthy trade negotiations or appeals through the World Trade Organization, never truly fixed imbalances with China or others, and that a shock like this was long overdue. They credit Trump's hardball tactics for bringing foreign leaders to the table and say short-term turmoil will be worth it if it yields fairer terms of trade. In the meantime, the 10% baseline tariff that Trump left in place on most imports is already reshaping business decisions. Some companies are seeking alternative suppliers in countries not targeted by U.S. tariffs. Others are considering passing costs to consumers and abroad. Some governments are quietly reducing their own tariffs to appease Washington, hoping to be spared greater penalties. The next few months will be critical. If Trump can sign even a partial trade accord with, say, the EU or UK, he will tout it as a victory of his tough approach. If midsummer arrives and the 90-day pauses expire without deals, a new wave of U.S. tariffs could kick in, likely met by retaliatory tariffs against American exports. That worst-case scenario could hit industries from Midwestern farms to tech companies. For now, the world can only watch and prepare. Trump has made it clear he is willing to take the global trading system into uncharted territory to secure what he sees as a better deal for America. And he shows no signs of backing down.